Hello and welcome back for another edition of London Direct. It's time to talk Europe and how to trade the euro. I've been speaking with Miles Eakers from Savi Trading. So Miles, we've seen the Eurozone slip into deflation. What are your take on the numbers?
I think it's pretty much in line with what a lot of the market were thinking. I know the data's slightly softer than expected, but we really are seeing a deterioration in Europe. It really is slowing down. I think there's a lot of rhetoric coming from Draghi. Will he or won't he? He needs to act, really. If you're of the view that QE works, I'm of the view that it doesn't. I think we need structural productivity reforms within the Eurozone, especially in the periphery, and potentially even some of the peripheral states leaving Europe, like Greece, that can't compete even with the euro at 120. It's not efficient for them.
So explain to me the theory behind QE. I know you said you don't think it'll work, but why would buying government bonds for countries like Germany stimulate the whole of the Eurozone?
Well, if you look at the US and the UK model, and especially what they're doing in Japan as well, the concept is if you loosen monetary policy, you can stimulate growth. That's very much a Keynesian economic style of view, and more of the Austrian view where the long-run aggregate supply curve is vertical. You can't just create growth out of nothing. Growth comes from productivity and research development, and that needs to come from the supply side. So for me, all QE will do in essence will make the individual have to work even harder, cause more social unrest, and create greater distribution between the rich and the poor, which is what we're seeing in America at the moment, where the top 1% are owning more and more of the US.
Do you think that the political situation in the Eurozone means that QE is more difficult? Because we have the whole possibility that Greece might not even be in the Eurozone.
Yeah.
So how can you buy that country's bonds if it just leaves?
Yeah, we've seen quite a lot of rhetoric. I think obviously Draghi wants to do QE. He wants to go out with a bang. I think he may be leaving within the next year or so. You look at Trichet raising rates just before he left. You look at Draghi, one final big hurrah basically. Bernanke didn't do tapering when we thought he would. Central bankers are to an extent egotistical. The problem is though that if you look at German law and within Europe, QE doesn't necessarily or legally can happen. Especially if you look at Greece at the moment, basically saying that Syria's getting a 3% lead. They may just say we're not going to pay back this debt. So why do QE if no one's going to pay back the money? So I think the political unrest at the moment is really causing some uncertainty, and you can see euro trading at 118.50. That's 400 pips down in over only a couple of weeks. There really is some uncertainty in the market. Whether or not this is actually a good opportunity to buy euro remains to be seen.
Yeah, so let's talk about the currency itself. What is the trade here? I've spoken to some people, some analysts saying that when QE happens, that's going to be bad for the euro. But isn't it a case that at least it shows the central bank's doing something which should support the euro?
Well, yeah. If you look at when Draghi came out and said doing everything, and you saw euro go from 122 area all the way up to 139. You look at the last time euro was down here, the last Greek crisis, where we saw 118.75. On those two occasions, you had loose monetary policy by the states. As a result, euro dollar was able to go up. You look at the fundamentals now, US are tightening, Eurozone is loosening. I think technically speaking it's a great place to buy, but for that very reason I think a lot of people will get caught on the wrong side. I think fundamentally the picture is clear. You have to sell euro on any rally against the dollar, with the view we test 110 and even lower in the coming weeks and months.
So just to finish off, is it a case of just buy the dollar against everything?
I think so. I think the sterling's a good one to be short against the dollar as well. I think you look at the elections coming up next year, there's a lot of uncertainty. UKIP, if they get a big vote, they could push for a leaving from the Eurozone from the UK economy. I'm a bit sceptical about the yen. I think if you look at some more econometric models, you could argue the dollar-yen move has done a lot, but fundamentally speaking, again, this is another central bank loosening monetary policy against the states, which is tightening. You have what's going on with oil and other commodities, deflationary pressure. It allows the US economy to start growing at a faster pace had you seen oil at $100, $120 a barrel.
Well, always good to get some investable advice there from Miles. Stay tuned from Dukescopy TV for more interviews, but for now, goodbye.